Hi guys, Sharon Mensah with Exit Realty Preferred, coming to you with another frequently asked question video. Now today's videos are going to be broken down into three parts that we're calling the Finance Fridays video. So we're going to, one of the most frequently asked questions I get is, what is the first step in the home buying process? And one of the first steps, if not the first step to do in the home buying process, is to get with a lender. And today I have with me Laura.e.brooks from Homebridge Financial Services, who is going to be answering a couple of our financial questions. So thank you for being here with me today.
Thank you so much for having me.
Great. So the first part of the series, we're going to talk about the application process along with how important the credit score is in the financial process. Okay, so the first question, why should someone get a pre-approval letter before they start looking for a home?
Great question. So you always want to get the pre-approval letter first before you start looking for a couple of reasons. One, it will help you determine the price point you want to be at, and it'll correlate that to monthly payment. There are a few calculators online that you can do to put in the purchase price and what your monthly payment is going to be, but your loan originator will be able to give you a more exact number in terms of adding the property taxes and based on whatever loan type you have. So the other reason for wanting to get pre-approved first is with the market being the way that it is today, homes are going so quickly and sellers are wanting that pre-approval letter with the offer. So you don't want to be scrambling last minute trying to get pre-approved. Although it does not take that long to get pre-approved, but still you want to have everything ready to go and be able to jump on that house without having to get everything together for the pre-approval first.
Right. Sellers are requiring proof of funds or a pre-approval letter before they even consider the...
I don't blame them with this market. So you want to be ready to go and jump on and put that offer in.
Right. Okay, and then the second question about the application process is, can you give us an idea what the pre-approval process is like?
Sure. The pre-approval process is actually pretty simple. You can do the application either online or over the phone. It does not take that long to get pre-approved. You will need to provide your last 2 years of employment information, last 2 years of residences, and then you'll need to provide any assets that you have, such as a savings account statement, and then your proof of income, which would be your 30-day pay stub, W-2s, Social Security award letter, disability award letter if you're getting that, retirement, anything like that.
Okay, so during the pre-approval process, how important is the credit score?
Credit score is very important. It determines your risk level. So if you have a low credit score, maybe you've had a bankruptcy in your past, something like that, it's a higher risk for the bank to lend you money.
Okay.
But if you have a higher credit score, you're going to be a lower risk to the bank. And you'll be more likely to be pre-approved, and you'll also get a lower interest rate. The higher the credit score, the lower your interest rate is going to be.
Okay, and what are some of the biggest factors that you see that affect a person's credit score?
Payment history makes up a huge portion of your credit score. So you want to always be making sure to make the payments on time every month. If you have a credit card, always make the minimum payment at least. That way you're not having any late payments on your credit score, on your credit report. If you have even one 30-day late payment, it's going to affect your credit score.
Oh, really?
Mm-hmm.
Oh,
yep.
Okay.
And also length of credit history is also big, which obviously that takes just time to build.
Right.
But if you have a credit card that you've had for an extended amount of time, keep it open. Don't close it.
Don't close it.
If you close it, it could actually hurt your credit score.
Okay. So that was one of my next questions, how to build your credit score. Is that just keeping the active credit cards, the limits down?
Yes. So the only way to build your credit score is to have credit. So the first thing you would want to do if you have low or no credit is to open a credit card or have a family member add you as an authorized user on their account. And, go ahead and use the card, buy your everyday purchases, gas, groceries, things like that. Just make sure that you're always paying off the bill in full at the end of the month. And that will show that you have a timely credit history and you're making your payments on time, and that'll build it up.
Okay.
There is another option that you can do to build your credit, and this is great for people who have no credit at all, and that is to get a secured loan with your bank. A typical loan, you get the money first, right, and then you're paying it off monthly until it's all paid off. But a secured loan works the opposite way. So you actually pay, say, $50 a month. You pay that until you reach that amount, and then you get the money. Oh. So it's a benefit in two ways. One, it helps build your credit by giving you a credit history to where you're making those monthly payments. And then it also, you end up with a little bit of money for your savings account at the end.
Okay. I have had a person come to me and say, well, I haven't used it. I've used cash for the past 5 years. So that's not a good thing.
No, unfortunately it's not. I know there's a lot of financial gurus out there that, say, don't use cards, but you kind of have to if you want to buy a house.
It helps you establish
It shows banks that they can lend you money, and then you'll pay it back. That's basically what it does.
All right. Well, thank you. That was part 1 of our session. So stay tuned for part 2 of our session, where we'll be talking about loan costs and the loan process.